Hi everybody, welcome back to the 10th of an hour with Griff. Today's episode, episode 73, it's really just going to be more informational and not explanatory. We're going to cover the 2021 tax inflation adjustments that are relevant to wealth planning. So we're really just going to look at a handful of the tax inflation adjustments that apply in the estate individual income tax and retirement planning. Now all of these are listed in Revenue Procedure 2020-45 if you want to look them up by reference, but I thought I'd give you a little shortcut here to see on the horizon what those numbers might be if there's no legislative change post-election. So everything is speculative right now, and in 6 days we'll know a little bit more potentially about what's going on, hopefully. So as always, this presentation is not intended to substitute for legal or tax advice. Now, starting with the estate and generation skipping transfer tax, for the time being, minus any future legislative change, the basic exclusion amount has been increased for 2021 to $11.7 million, and by reference, the GST tax exemption has been increased to that amount as well. Now, there's also a special use valuation which allows you to reduce the value of farmland or real estate used in a closely held business from its value at current use. And there's a maximum reduction you can take that's indexed for inflation in the tax code, and that maximum reduction for 2021 will be $1,190,000. So for example, if you had farmland that's valued at $3 million as a farm and $5 million as a development, you could only reduce it down from $5 million by a maximum amount of $1,190,000. So you couldn't take it all the way down to $3 million. It would be, really $3.8 million and change. Now on the gift tax side, the gift tax annual exclusion has stayed the same. It's indexed for inflation, but only in increments of 1,000. So it doesn't change every year. It changes every few years, but that's still $15,000 per donee for gifts of present interest. And one hint I'm going to give you here is that annual exclusion may increase in 2022, because if you 10x that with the inflation adjustment, you get the superannual exclusion in the second bullet point, which is for gifts to non-citizen spouses, and that will be increased to $159,000, and a tenth of that is $15,900. So it looks like we're close to hitting that $16,000 threshold on the gift tax annual exclusion. Then obviously by reference to the estate tax basic exclusion amount, the amount you can apply to the applicable credit against gift tax is also increased to $11.7 million for taxable gifts that don't use the annual exclusion or the superannual exclusion. Now on the income tax side with trust, we have some of the rates in brackets set out here. Importantly, your highest ordinary income tax rate or short-term capital gains rate kicks in over $13,050 for income retained in the trust and not distributed during the year. And then on the capital gains side, your maximum 20% capital gains rate kicks in for the trust when the retained long-term capital gain exceeds $13,250 after taking into account ordinary income and short-term capital gains as well. Now on the individual income tax side, we have a bump in the standard deduction. You can take a $25,100 standard deduction for joint filers, or $12,550 for single or separate filers. And with the 37% rate, the highest tax rate, the threshold at which that kicks in is a whopping $628,300 for joint filers for their taxable income. For single filers, that maximum rate will kick in once you exceed $523,600, and then for separate filers, it kicks in at one half the joint threshold, $314,150. Then with your capital gains rate, you have the 0% rate up to $80,800 joint or $40,400 single or separate, and then 15% in between, and then the 20% kicking in when you're over $501,600 joint, or $250,800 for single or separate filers. Now finally, on the retirement planning side, there's not much change. Your maximum 401k contribution will stay at $19,500 for the year. Now that's the basic contribution. That doesn't take into account any sort of cash balance plan or anything like that. Your maximum IRA contribution remains still at $6,000, or if you're age 50 plus, you get the makeup contribution, which is still $6,500 as well per year. Now, your eligibility for the IRA, the phase-outs for the traditional IRA are now $66,000 to $76,000 for single filers, or $125,000 to $208,000 for joint filers. And a lot of that has several permutations, as you may well know, within especially the joint filers, as to which spouse is eligible for an employer-sponsored plan and whether they participate, and so on and so forth. And finally, with the IRA, your phase out for eligibility to contribute to a Roth IRA for 2021 will be $125,000 to $140,000 for single filers, and then for joint filers, the same traditional IRA phase out range lies as well. That'll be $125,000 for joint filers. So those are just a handful of the 2021 tax adjustments. As I said, who knows if any of these are going to be changed post-election, and if they are changed, who knows if that will just be after the legislation is enacted, or if it'll be made retroactive to January 1 of 2021. And a lot of that may be contingent on COVID relief if a second round is passed as well. So lots of things up in the air, but for the time being, these are your relevant 2021 income tax adjustments for estate planning and individual income tax. As always, if you have questions or topic suggestions, you can email those to me at griffin.bridgers@gmail.com. Thank you for listening to this episode of the 10th of an Hour, and I look forward to seeing you in the next one.